Good evening, everyone. I'm going to do a quick update on the market, and I'm going to stick with the ETFs. That way, you can, I guess, go back and relate it to the previous update that I did also with the ETFs. And I'm looking at the SPYs or the S&P spiders. And what I've done here is I'm looking at. Let me actually take this out real quick. The Fibonacci retracement. We're looking at this uptrend channel that the spiders have been in, or the S&P has been in, and we broke it yesterday, and with expanding volume. Let me go ahead and zoom in, and this is the daily chart, by the way, and we bounced off the 34 daily moving average, but today we came back and almost back tested it to the penny, um, with contracting volume. That to me tells me that this pullback or is not over yet. So what I'm doing now is I'm using a Fibonacci retracement to see where we could end up at after this little correction or pullback is done, because nothing ever goes up forever and nothing ever goes down forever. So to continue our nice healthy bull run, we have to have this pullback. So since we have broken this uptrend channel, my indication is that, or my analysis is that we're probably going to head to the 38% retracement, because we see some support lines, meaning that points that we have come down to that same area we bounced off right here, and also right over here too, like you can see. But and also at one point it was resistance. So this 38% retracement is a very valid area for us to head down to. And let's look at, if we look at the on the weekly, and let's go ahead and zoom in. That 38% retracement will also coincide with this somewhere between this 13-day moving average and the 34-day moving average. So this pulling back some, the this moving average will flatten out some, and will probably head somewhere around this 130 area. But nonetheless, 129, 130 will probably be a good area to look for this market to end up at before we continue higher prices. Although like this market has been crazy as far as volatility, so you never know. I mean, people have been buying. There's a lot of people on the sidelines, and once they see a little bit this market a little bit down, they will be coming in, and they will be holding this market high and this higher level. So we may also just stay on a sideways consolidation. So let's see what happens in the next couple of days. Now let's look at what's going on with the Qs, which is the Nasdaq 100 ETF, and on the Qs, the Qs is definitely one of the strongest because of the sectors there that it's that the sectors that makes the Qs. Also, you have Apple, which is one of the strongest. I guess equities out there, and but I do want to show you this this dotted line. If you do a uptrend channel from, we have touched this uptrend channel quite a few times, and we actually broke it broke down from it, and today we came back and back tested it. So that being said, if we use the Fibonacci retracement again, the 23rd% retracement, it also coincides with the 34-day moving average. So the Qs being having one of some of the stronger sectors in the equity markets right now, I do believe that we may just head down to the 23% retracement before we turn around and continue to higher prices. If you look at on the weekly you have more like a 38% retracement, because the weekly, the 13-day moving average on the weekly, it's somewhat lower. So we will have to see how what happens in the next couple of days again, after we go for another leg down. We'll see how strong the next leg down is, and we'll analyze from then. So finally, if we look at the small caps, which is the you have the highest volatility in this indice. Here I'm using the IWM, which is the ETF for the Russell 2000, and if you can see, we've also taken out this broken down from this uptrend channel, and again today we the indice came back in and back tested it, and actually this one looks the best as far as technicals, following the technicals, and more than likely we'll be seeing this one head down to either the 38% retracement or the 50% retracement because of how volatile this index is. You have small capitalized companies, and they're usually easier. Those companies are easier to move one way or another because they do have less outstanding shares to for the investors to trade. So let's look at also at the weekly to see where those moving averages, and like you can see, a 38% retracement does look like a liable target, because the 34-day moving average on the weekly will also coincide with the 38% retracement. So to me, this one, this indice or this ETF is the most likely that will follow, because so far this one looks the cleanest as far as the targets. So I will be doing an update probably by the end of the week, or on the weekend, to see, depending on how volatile the next couple days, what we get in the next couple days. So just stay tuned. Okay, thank you for listening. This is directionalanalysis.com.